stop what you're doing for just a moment. Close the other tabs. Put the phone down. Because what I'm about to explain is not a rumor, not a headline, and not clickbait. It is the most important shift in global finance since the end of Bretton Woods. And if you miss it, you won't lose money slowly. You'll lose purchasing power overnight. Today is Tuesday, February 3rd, 2026, and the global monetary system is closer to a reset than at any point in the last 50 years. Right now, China is preparing to make a move that will permanently change the balance of financial power, and almost nobody in the United States is prepared for it. They are preparing to reveal their true gold reserves, not the number reported to the IMF, not the sanitized figure buried in central bank disclosures. The real number. The physical gold accumulated quietly, methodically, and intentionally over decades. And when that number becomes public, the rules of the game change. This is not about China winning. This is about the dollar losing its monopoly. For more than half a century, the United States has enjoyed a privilege no empire in history ever had: the ability to print money without immediate consequences. That privilege exists because oil is priced in dollars, global trade settles in dollars, and foreign central banks recycle their surpluses into U.S. treasuries. That system only works as long as the world believes the dollar is the safest store of value. And that belief is cracking. The market is already telling you something is wrong. As of this morning, gold is trading at $4,114 an ounce, up $256 in a single session, a 5.5% move in what is supposed to be a stable asset. Gold does not move like that for no reason. That is not retail investors buying coins. That is not speculation. That is sovereign-level demand. And there are only a handful of players on Earth with the balance sheet capable of doing that. China is one of them. China does not accumulate gold the way Western countries do. They do not buy it transparently through official reserves, and they do not announce purchases in real time. They use state-owned enterprises, sovereign funds, provincial entities, and offshore intermediaries in places like Hong Kong and Singapore. The result is massive accumulation that never appears in official reserve data. Independent analysts tracking import flows, refinery output, and vault movements in Switzerland and London estimate China each true gold holdings somewhere between 20,000 and 30,000 metric tons. For context, the United States officially holds about 8,000 tons. Germany holds roughly 3,300. The IMF holds less than 3,000. Even if those estimates are only partially accurate, China already holds more gold than any power in modern history. So why reveal it now? Because timing is everything. China has spent the last decade building an alternative financial system, yuan, clearing hubs around the world, bilateral currency swap agreements with dozens of nations, energy trade increasingly settled outside the dollar, Belt and Road trade flows that bypass U.S. financial plumbing entirely. Gold is the final piece. A gold-credible yuan gives countries something they haven't had in 50 years, a dollar alternative that does not rely on trust alone. When the announcement comes, the sequence of events is predictable. China reveals its reserves and markets immediately reprice trust. The dollar weakens and gold revalues higher. Oil exporters expand non-dollar settlement. Central banks begin diversifying out of treasuries. Treasury demand weakens and yields rise. The Federal Reserve steps in, and money printing resumes. No matter which path the Fed chooses, the outcome is the same. Defend the bond market and debase the currency, or defend the currency and crush the economy. There is no painless option left. This is where silver enters the picture, and why it matters far more than most people realize. Gold protects wealth. Silver reprices it. Silver is both a monetary metal and a critical industrial input. It is essential for solar panels, electric vehicles, electronics, and medical technology. China is the largest consumer of all of them, and silver supply is already tight. When monetary demand collides with industrial scarcity, price moves become violent. Silver does not climb slowly, it gaps higher. This is not about panic, it is about positioning. You do not need exact dates, and you do not need perfect timing. You need exposure to assets that cannot be printed, because whether China announces tomorrow or 6 months from now, the direction is already set. Debt levels make reversal impossible. Trust erosion makes delay dangerous. The real risk is not that gold or silver pull back in the short term. The real risk is waking up after the repricing, holding dollars, bonds, or paper claims, and realizing the system changed without you. That is how wealth transfers happen. Quietly. Quickly. And only once. Empires do not collapse in a single headline. They erode and then they reprice. Gold is signaling that repricing is close. Silver is telling you it will not wait. Pay attention, because history does not warn twice.